Hey everybody, Real Estate Ninja here. I hope you're doing great. We're going to talk about an insurance crisis. We're going to talk about Florida. We're going to talk about how it's going to affect the Florida market. And even if you're not in the Florida market, you've got to watch what's going on, because as insurance companies hit the panic button and pull out of regions, we're seeing it on California and Florida, right? Those are the two big real estate markets next to Texas. We've got a lot more than that, but we're talking about just sheer size. They're pulling out of the big markets. That should show you something. Not only due to hurricanes and fires, but things are getting too expensive, right? Just the cost of repairs for any kind of disaster or thing that goes wrong and is cause for an insurance claim, they are having to pull out. And what's going to happen is it's going to add more pressure to raise prices around the nation. So it's going to affect everyone, but also it's going to affect real estate values, and it's also going to cause a panic, all right? These are the kind of things that we want to pay attention to. It's one of the factors I talk about in the real estate crash course, one of the signs, and this should be getting you excited, right? Guys, if you want access, somebody was asking the other day about the discount code. They had ended. I threw a few more out, so I'll put the 80% off links down there. It's $199 for the course. I think there's over 28 lessons now on there, video lessons. I can guarantee you, you're going to save a lot more money than $200 in this next crash. So check those out. Once they're gone, okay? I'll put that link below. All right, this is out of Newsweek. It's entitled, Florida Insurance Crisis Sparks Fears of Housing Market Crash. It says Farmers Insurance recently, their recent announcement that it would discontinue new coverage in Florida has fueled concerns from real estate experts that the end may be near for the state's housing boom. Now, let me stop there real quick. Just so you know, it's going to end the housing boom, right? It's one of the myriad of factors that is going to cause the housing boom to stop and a correction, a deep correction, actually a crash in real estate prices to begin. Now, that already has started. There are 10% cuts across the board all over Florida. It's going to get a lot better. But I want you to understand, this isn't the end. The end is not nigh. And the reason why is because for every company that stops writing new policies, there will be a company eventually that it will be profitable enough for them to pop in and start writing new policies, okay? But with human behavior, and that's what really builds up or takes down a real estate market, they just think that whatever's happening today is going to happen forever. It's called normalcy bias. And you need to understand that this is nothing new under this. There's nothing new under the sun. This has always happened throughout real estate cycles, wealth cycles, and it's so easy to predict. After a while, you'll actually start laughing because it's so easy to see it. Once you see it, once you learn it and you go, oh my gosh, this is really like how the ninja said, then you'll know it forever and you'll be getting excited about the next boom where you're buying up homes, but then you're going to be getting ready for the next bust. You're going to sell your homes. It's crazy that people just don't see this, but that's what's exciting and that's how you build real wealth. It says here on Tuesday, Farmers informed Florida that it is discontinuing new coverage of auto, home, and umbrella insurance, which is a move that will reportedly affect 100,000 policies. Farmers is the fourth major insurance company to leave the state, with most citing the risk posed by hurricanes. The pullouts, which have triggered criticism towards 2024 candidate Governor Ron DeSantis, could spark a volatile response in the housing market, which has retained high prices despite inflation and interest rate hikes from the Federal Reserve. During the home price surge last year, Florida ranked second on a list of 11 states that saw home prices increase by more than 20% in the first quarter. According to Moody's Analytics, Florida trailed only Arizona and was one spot ahead of Georgia. Now here, check this out. Professor, it's going to destroy this one, Istak Ben David, finance professor at Fisher College of Business at Ohio State University, told Newsweek that the result of major insurers pulling out of the state could be profound on the housing market. He says skyrocketing insurance charges and the complexity of acquiring coverage may discourage aspiring homeowners, potentially triggering a drop in property values, Ben David said. Now, this is what's crazy. These are the pros that are talking, right? All he's doing is reacting to the news. He's not telling you what's going to happen next, because very few people do. And like I said before, and I'm going to say it again, insurance companies pull out, there will be insurance companies that pop in, because there's always a point whether prices have to come down to correct or they get high enough to where it makes sense. When they get lowered, they come down. Sorry, I'll start there. When they come down, they drop in price. It starts to revitalize the economy. People start buying homes, things like that, right? But when it gets high enough and there's still a market out there, insurance companies do jump in there and take advantage of that. All right, so just because State Farm pulls out of California or Farmers pulls out of Florida, there will be another insurance company to fill their shoes. End of story. That is literally what happens, okay? But these quote unquote professionals, they're not telling you that. They're just reacting to what's going on right now. And when he says it may cause a drop in real estate, it's actually guaranteed because it will affect new buyers. Because one thing that new buyers are looking at is literally the all-in costs. And not only that, the banks are looking at that too. Like, hey, we're about to loan these people money for a home. Do they have good credit? Do they have good job history? But not only that, do they have a good current job? But not only that, are they able to obtain insurance because they are requiring those people to have insurance. I just went through, saw a foreclosure posting literally last week that they're losing a $500,000 home with only literally owing $9,900. This is no joke. I was right there. This happened because they don't have insurance on the house. All right. Now the buyers are completely bewildered, or the owners of the home, and you don't really own the home if you got a mortgage, right? This is obvious because they're getting their home taken, are in total denial. They said, yeah, they're having money problems. They don't believe the house is going to be sold. It's going to be taken. If they did, they would truly do the easiest thing in the world. They would actually call a real estate agent and say, hey, this thing's worth $500,000. Put it on the market right now for $200,000. Watch how fast it sells. But they're not. And so my point being is that this pro that's saying, yeah, if new home buyers can't obtain, good insurance at a reasonable price that they can afford, this may affect them buying. No, don't be an idiot. It's going to affect them buying it. But this is what's great about the real estate market. So few people actually know how to judge these cycles and how to make money from them. So guys, I hope you got something out of this. This is great news. I'm gonna put some of those 80% off discount links down there. When they're gone, they're gone. And then we'll run a sale later. Hope you guys have a great day. The Economic Ninja, I'm not that. He made me say that. Real Estate Ninja is out.